Hey there, book enthusiasts. Welcome back to Literate Lens. Today, we're diving into the world of value investing with an exciting book, The Dhandho Investor. If you're curious about unlocking the secrets of high returns with a low-risk approach, you're in for a treat. So grab your favorite snack and let's jump right into it. Before we delve into the details, let me give you a quick overview of The Dhandho Investor. This book, authored by Mohnish Pabrai, introduces a fascinating approach to investing that's inspired by the principles of successful investors in the Indian business community. The book reveals how to apply their Dhandho methods to achieve remarkable results in the stock market.
Dhandho 101. Invest in existing businesses. The previous chapter was an introduction to the principles of the Dhandho framework. This chapter will explain the first principle in more detail. The stock market is when you buy some shares in an existing business. If you, for example, buy shares in the Papa Patel Motel, you'll be his partner, and you'll make as much profit as he does. Investing in the stock market has benefits. First, it's better than buying an entire business where you'll have to run it yourself. That will be a lot of hard work. But if you buy a stock in an existing business, you'll be making profit without doing any actual work. If the odds are in your favor, and you invest in a stock that is profitable, you'll be making a lot of money. These businesses are publicly available on the internet. You can try investing in them. Having an ownership stake in a given business is the easiest way to make money. You won't have to create a business plan, hire employees, or run the business. All you have to do is make your bet. You can buy stock shares for prices that are lower than $10, so you'll be making more than that for sure in the future. Dhandho 102. Invest in simple businesses. Before you invest in the stock market, you must ask yourself, how do I know if I'm buying at the right price? What if I'm paying more than this business deserves? To avoid the math, the Dhandho way focuses on businesses that are simple. What do we mean by simple? We are talking about businesses that won't require a calculator to analyze, but they are just obviously good. All you'll need is a piece of paper and a pen to guess your estimated future earnings and future costs. If a business study requires more than that, you should avoid the headache. Simple businesses are the best to invest in. For example, Papa Patel bought his motel and did a simple analysis. He knew exactly how much he'll be making in the future and how much he'll be expecting to spend. So he managed to reduce the costs to the lowest, and he ended up gaining more than he was expecting. The Dhandho approach is based on simplicity. Every business should be like that. If the costs and the benefits are not clear from the start, that is a red flag. It means you should never invest in a risky, unclear, and uncertain business. Dhandho 201. Invest in distressed businesses in distressed industries. Business prices are never stable. You may wake up one day to find out that the prices are higher or lower. That's because markets are influenced by people and circumstances. So you should be smart and wait for the right opportunity. Don't rush in buying a business. Wait for a while. Another cheaper and better deal may come your way. When a businessman is depressed over the future numbers of his profit, he'll sell at lower prices. Take that opportunity and make a Dhandho bet. If you don't, the businessman may change his mind. Let's learn from the story of Mr. Market. He is a theoretical character that Benjamin Graham created. Graham is the author of the best-selling book, Intelligent Investor. Mr. Market lives and breathes for stock trading. He is buying and selling stocks all day. Mr. Market reacts on impulse. When the prices are going down, he sells his stocks quickly. When he sees a high-value stock, he jumps on it and buys at once. The problem is that Mr. Market is spending lots of money with minimum returns. He's finicky. He doesn't think before buying or selling. The people who benefit from all the impulsive traders out there, like Mr. Market, are Dhandho investors like Patel, Manilal, and Mittal. Dhandho investors buy when there is a crisis. This is because they know that eventually the stock market or the economy will get better again. When the time comes, they will be the ones to get the high returns. Dhandho 202. Invest in businesses with durable moats. A moat is the competitive advantage that a business has over its competitors. It is best to invest in businesses that have durable moats. If your competition wins the race, then you'll lose a lot of money. You may be thinking that investing in such businesses will set you for life. You are wrong, because there's no such a thing as a permanent moat. All businesses will fail at some point. A better company will come along and change the market. So, what can we do about that? All you can do is think 10 years ahead. No more. If a business has an advantage that will guarantee the flow of cash for the next 10 years, then you should buy it. An example of a durable moat is the author's favorite restaurant, Chipotle. He describes its success by the long line of people waiting at the door. The author will prefer to get in line and wait for his turn, rather than go to another restaurant. Why? It's because this restaurant is different from the rest. They have established a competitive reputation that no one can replicate. Chipotle use fresh and high-quality ingredients. They make tasty food, and they offer good services. The customers can control how much of each ingredient they will get. That service is rare to find anywhere else. Chipotle has expanded to open 500 more restaurants. Although other restaurants have tried to copy their brand, no one has succeeded yet. Chipotle is a great example of having a durable moat. Just imagine how much money they are making because of that advantage. Judging by the number of restaurants they manage to open, they are making huge profit. Dhandho 301. Few bets, big bets, infrequent bets. Let's imagine that you have found a business that is simple. Because it is in trouble, the owner is willing to sell at the lowest price. This business expresses your skills perfectly, and you are excited to work there. This business has also durable moats, so profit is guaranteed. So you buy it. Let's say it's worth $30, but you bought it for only $10. How do you make its price go back to the original 30? Well, nothing much. You just wait for the market and it will take its natural course. History has proven that business sold in distress will pick up the price eventually. Once the crisis is cleared, they'll go back to their original value. So just be patient and wait. In 1963, Warren Buffett invested 40% of his net worth in American Express. He put almost $7 million in that company. During that time, American Express has been hit hard by the salad oil crisis. They have lost $60 million because of a bad choice they made. So its stock price was instantly cut in half. Warren Buffett was asked why he made this huge bet. He could lose everything after all. He said that this kind of opportunity is rare in history. He was convinced the American Express will get over the crisis and it will be making huge profits soon. So what you should learn about this example is to make few, big, and infrequent bets. Trust in your gut feeling and don't bet frequently. The Dhandho framework obliges you to be smart and know your possibilities. Conclusion. In this book, you learned about the 9 principles of the Dhandho Investor. You have learned that obstacles don't matter much when there is a strong desire to win. Just because things are difficult for you, you don't have to give up being rich. This book introduced you to great examples of people who have made wealth starting from nothing. All they had was the Dhandho mindset. You have learned the importance of waiting for the right opportunities and going for simple businesses. You also learned how to hunt for stocks that are profitable. Life is all about making bets. Business is about making the right bet at the lowest cost possible. Choose to be a Dhandho investor so that if you win, then you become rich. If you lose, you won't lose much. So don't be discouraged by a poor, difficult life. Be strong, get up, and follow the Dhandho path towards wealth and success.
And there you have it, a sneak peek into the world of the Dhandho Investor. This book offers a refreshing take on value investing, combining practical strategies with a mindset that's proven to be successful for many seasoned investors. If you're intrigued by the idea of making smart investment choices while minimizing risk, consider giving the Dhandho Investor a read. If you enjoyed this overview, don't forget to hit that like button, subscribe for more insightful content, and let me know your thoughts in the comments below. Until next time, happy reading and